Varma is with us, Managing Director and Chief Economist, India and Asia, ex-Japan at Nomura Financial Advisory. We also have Samiran Chakraborty, Chief Economist for India at Citi, who's with us. Sonal, Samiran, great to have both of you here. Thank you very much for your time. Samiran, if we can start by asking you, how do you read this? How will this, in your opinion, this is, of course, extra fiscal space which opens up. The question, though, is how will this be put to use? So your first thought, Samiran.
Good morning, Prashant. I guess this was, to us, somewhat expected. We were putting out in our notes saying that there is a possibility that the RBI dividend will be significantly higher than what the government has budgeted for. And so that way, it's not that big a surprise for us. Yes, it means that the government has three options in some sense. One is that it can reduce the fiscal deficit, 0.3% of GDP, as you mentioned. It can utilize this money for more fiscal expenditure, whether it is capex or any sort of populism. And the third one is that there are always unforeseen circumstances because of which some of the budget arithmetic can go wrong. This just provides an elbow room to the government to stay with that 5.1% number, adjusting for those unforeseen circumstances. Now, obviously, the question that we are getting is that is going to be more of expenditure versus more deficit cut. Look, in my view, this is a one-time thing that the government is getting. If it is spent on certain kinds of expenditure, which has more of a recurring nature, which next year you cannot withdraw, then it's difficult to do it on the expenditure side. Whereas if you do it on the deficit reduction side, this is also going to be a year where we'll be flooded with more demand from FPIs after the bond index inclusion. So both the supply will be lower and the demand will be higher, means that yields can collapse under those circumstances, making RBI's job more difficult. So it's a complex problem that the government will have to deal with, but it's also a problem of plenty. So I think every government will welcome this as well.
Okay, it's a problem of plenty and every government will welcome this. So that's the moot point, right? It's positive for the government, for the bond market, etc. Sonal Varma is also joining into the conversation. Sonal, hi, good to speak to you after a while. So it's this tough decision between increasing spending on one hand or reducing the fiscal deficit, right? Which way do you think the government would head and what are the overall implications of this announcement?
Yeah, it's a good problem to actually have. I think we are still too early in the year actually for the government to also take a call on what to do because in terms of potential, more expenditure as the year progresses, for instance, the subsidy amounts could be much higher than what they've budgeted because if you look at the revenue expenditure increase, the percentage increase in FY25 in the interim budget is not substantial, so that could be higher. And similarly, the disinvestment side, last many years, we've seen a disappointment. So that could be a bit of a negative on the fiscal finances. So we're still early in the year. Government has time. Our own sense is they might therefore do a mix of all. The budgeted amount on the RBI dividend specifically, we don't know, but our own estimate is the B amount is closer to 850 billion INR. So the 2.11 trillion in RBI dividend actually is around 1.3 trillion above the budget estimate. So that's closer to 0.4% of GDP. So it's a substantial fiscal bonanza that has come in. We think the government could therefore choose to reduce the deficit marginally when it presents the final budget in early July, which is what we're expecting, but also leave some cushion for any unexpected shifts that might happen on the revenue and the expenditure side. Outside of this, there will be implications on liquidity as government starts spending. This is more of a medium-term issue. And given the significant amount of RBI dividend, the extent of reserve money that the RBI needs to create through expansion of its domestic or foreign assets will be that much lesser. On the bond side, this is actually going to add to the cash surplus that the government is sitting on. This is I mean, this could very well go, above 5 trillion INR, and therefore some sort of a reduction in the borrowing, could happen. Again, the details of this are likely to get announced in the budget. And as Samiran was saying, it's really positive from a demand-supply environment. So our own forecast is that the 7-year as well as the 10-year bond yields could drop to 6.75%.
Wow. I mean, so more downside here. I mean, of course, today markets are shut. Otherwise, we would have perhaps seen some more reaction after yesterday's sharp fall. Samiran, the market did respond, right? Yields fell sharply. So, well, you said that, well, you were expecting it. The market liked what it saw. So, if you want to sort of comment quickly on that. So, and as Sonal is saying, that it does, make it easier for the government to meet its fiscal consolidation roadmap in that sense, but it also gives the opportunity for them to alter the budgeted receipts, expenditure, etc. On the on that front, on the second part, do you think we should start from and this is of course more in line with what markets are looking at, the infrastructure sort of thrust, roads and capex, etc. What about taxes? The lower end of the economy has been hurting. Maybe something on personal taxation, lowering it a bit to boost that. I don't know if that's going too far, but Samiran, any thoughts?
So Prashant, on a lighter note, till the actual budget is announced, everyone will want to see what he or she wants to see. So on the bond market, people will want to see a lower fiscal deficit. So bond markets will react positively, thinking that the government will actually reduce the borrowing numbers. On equity market, if you are a holder of a capex play, then you would be wanting the government to do more of capex out of this and may react on it. If you think that actually by reducing taxes, you can stimulate consumption, which has been a bit weak in recent times, then you might think that that's the way the government is going to do. But to be honest, no one knows at this point of time exactly how the government is going to approach this, the new government. So I'm not going to venture a particular guess on exactly which way things will move. But one thing is very clear, that suddenly the budget will become more interesting than what we were thinking before. What the initial thought process was that the government will do only somewhat marginal tweak to the interim budget numbers, because the interim budget itself was quite detailed. Now, with this more than 1 lakh crore extra kitty, the budget maths will have to be reworked, and it will become very interesting, and the market will keep on speculating till it's actually announced.
Okay. Well, something for the market to speculate, right? Thanks a lot to both of you, Samiran and Sonal, for joining us this morning and talking about the macro setup.